Well, a lot of traders look at seasonal patterns within markets, especially in Forex, and our guest is here to talk about that today, John Foreman. John, thanks for being here.
Thanks for having me.
Well, what are some good ideas for seasonal trades in Forex?
Well, some of the ones that people probably have heard about involve the dollar around the beginning of at the end and the beginning of each new year. Toward the end of the year, the dollar tends to be sold off November into the middle part of December. But then as you go through into the new year, through January, and even a little bit into February, it switches around. It becomes much more dollar positive. And it's been a really clear pattern these last couple of years if you look at something like Eurodollar, where just in the last 2 Januaries alone, I think the cumulative loss for Eurodollar is about 800 pips. There's definitely stuff going on.
So how would you recommend trading that, either the spot market or futures market?
Well, you can go either way. I mean, that ends up becoming a personal preference. For me, there's a couple ways you can kind of use seasonals. You can, of course, trade them straight up. You know, the seasonal pattern is bullish, you buy, bearish, you sell. That's tough. That's something that you have to take a very long-term view on because you have to get the numbers working in your favor. Yeah, you might have a 75% bias in one direction for, you know, the month of January or whatever the case may be. But that's, you know, 1 month in the year. It may not work that year. You may be in the 25% year. So if you take that bet, you know, you stand a chance of having to sit through a drawdown. Something that's probably a little bit easier for most people to do is, if depending on whether they're discretionary or systematic traders, use the seasonal patterns as a kind of filter or a biasing factor, where it'll either have you take a trade or skip a trade, or maybe alter your risk on a trade. The patterns with you, maybe take a little bit more. Patterns against you, maybe take a little bit less.
So instead of maybe just trading it outright, use it as maybe a confirmation or some other thing to look at outside of that trade.
Right. I actually did a little bit of a test just to kind of justify and verify in my own head, and I looked at a very, very simple pattern or system with Eurodollar based on the dollar's monthly patterns. And I started off with a swing system that was just use a 6-day high breakout system. So if today's close is the highest in 6 days, you go long, vice versa, you go short. And over the last year, so about middle of 2009, the results were about down 5% for the system. When I put in the filter based on the seasonal patterns, swung the opposite direction, it was up about 6%. So about 11% improvement. And that took out, I think it took out about 20 trades that were done. The win rate was about the same, but you're obviously out of the market a little bit more, so your exposure is significantly less. Plus, you've got better returns.
John, thanks for your time.
Glad to be here.